Welcome back. Subex is a stock which is on our radar today. It's up 43% this month. It's up 188% since the start of this year. We're now joined by Mr. Vinod Kumar, the MD and CEO of Subex. Mr. Kumar, morning. This is Reema here. Just a couple of days back, you had announced about a deal win with Spire Solutions, which is a leading oil and gas company in Middle East. Can you tell us the size of this particular deal? What does it take your order book to? The last update that we had was, I think, $110 million as of the end of March.
Yeah. Good morning, Reema. Pleasure to be here. With the specifics of the win, the security solutions that we have, which originally started with IoT, we have expanded that to cover the needs of operational technology. That is the technology that is used in the manufacturing and infrastructure and oil and gas and those sectors. And with this launch, what we are doing is that we are also working very closely with the distributors, key distributors in selected geographies of North America, Middle East, and India. These are the three focus area for us when it comes to security. With Spire Solutions, which is one of the key distributor that we have in Middle East, we have won this deal. Now, this deal is a subscription-based deal because most of our security new products are in the subscription-based deal. I'm unable to provide you a specifics on the value of the deal because we are in the silent period, and we will provide you more details with respect to the order backlog along with our Q1 results. But this is very strategic for us because it brings us into the realm of securing critical infrastructure, which has become a very important aspect considering a lot of cyber attacks and the geopolitical situation and different types of actors getting into this thing. So it's a very, very important and significant win for us.
Okay, so you can't share what the size of the contract is, but can you tell us in numbers, what is the opportunity that it opens up? You spoke about, some geographies which open up for you.
Yeah, so this opportunity is about securing all the sensors that this particular enterprises have started deploying. The first phase covers some aspects of the refinery. And as we expand into multiple phases, this particular enterprise is also automating and digitalizing their whole operation. And this provides us a golden opportunity to be their partner in securing their entire infrastructure when it comes to cyber and digital security. Now, this is also our intention is to make this as a showcase for oil and gas sector when it comes to operational and IoT or operational technology and IoT technology security. And this should help us to significantly expand our reach into the oil and gas sector, which is one of the key sectors that is getting a lot of investment from cyber, particularly post some of the attacks that you have seen recently, the well-publicized attack in US pipeline and things like that. So this is very important for us.
Vinod, you've turned cash positive. Your cash on the books is 140 crore. And I remember a couple of years back, you were sitting on a mountain of debt, close to about 600 crore rupees. What is the plan? You've announced a dividend last year. Would you look to up your dividend ratio from the current 15%? What is the investment that you've lined up in technologies? Is there an acquisition which is on the cards? Can you tell us what you plan to do with the cash and the cash that you're generating?
Okay, the focus would be to start with investing around some of these growth areas that we have identified. We have three big areas that we have identified. One is security, second is the identity analytics, and third is the HyperSense augmented analytics platform that we have recently released. So the short term, the investment, the cash will go through to the investments required, both in developing this portfolio and also to scaling it with the sales and marketing reach that marketing investments that will be required for us to reach outside this focus geographies. With respect to the dividend, that is something that we have have advertised, we have announced a dividend policy that we will have. And when the timing is right, based on the cash available, the board in its wisdom will take the decision on that. But I think our focus is to invest behind these growth areas because it's a great opportunities. The timing is right, and there's a good opportunity for us to scale these into the next level, Reema.
So with these investments, what are the margins that we're looking at? What is your preferred margin range or the comfortable margin range?
Yeah, so last year, if you look at, we operated in the EBITDA range of in excess of 25%. That's also because of some of the travel and the marketing related costs were down. The comfortable range that we are looking will be about 20-22%, which is probably the steady state EBITDA range that we will look to operate. And this is what we have set expectations as well, Reema.
Okay, so 20 to 22%. So that is some contraction from the 26.5% that you had in FY21. What about revenue growth? Last year it was just about 2%. The year before that, it was a 5% revenue growth. What is it that we're looking at?
So you're right. In the last couple of years, we had growth in a lower single digit. At least this year, our expectation is to grow in the double digit, Reema.
And any impact of the second COVID wave on your execution? 2% of your revenues come from India, APAC and rest of the world contributes 25%. Any hit?
Like with any other enterprises, we also had infections affecting some of these people, but I think we have come out of it. And again, the key thing for us when we look at our business is not to look at it from a quarter-on-quarter basis, because while we are transforming from a license-based business to a subscription-based business, it's a fact is that at this point in time, the bulk of the business is still license-based business. So there is this lumpiness that affects us from time to time. So the ideal thing for you to look at would be from a year-on-year basis. So definitely, I think from a year basis, we are moving towards the double-digit growth, which I indicated earlier, Reema.
Thank you, Vinod, for joining in. So that is Subex for you. It's been one big mover and the management is confident about double-digit revenue growth after revenue growth being just 2% and 5% over the last 2 years, though margins will contract. For the last 2 years, margins for Subex have been above the 25% mark. And as the management indicated, then margins could come down to 20 to 22% given the investments that they're making, as well as the fact that previously margins were artificially inflated due to COVID-linked savings. We'll get into a break on that note. We'll come back and chat about the market. Sunil Subramaniam, the MD and CEO of Sundara